700% growth in a stock in under a year. Sounds like something out of a financial fairy tale, right? Well, that's exactly what KPI Green achieved, skyrocketing its stock value in the last 1 year. But this might just be the beginning of an even bigger future. We are going to tackle some of the burning questions you have about these stock rallies. And of course, take a shot at forecasting what's next. Wondering if the stock's value is still fair game? Curious if this upward trend will continue or if a downturn is just around the corner? And most crucially, is it time to hop on the KPI Green train or has it already left the station? In the next few minutes, we are breaking it all down. The market cap of KPI Green was around 1500 crore in March of 2023, but was just the beginning. The massive bull run started and the market cap crossed a whopping 12,000 crores in August of 2024. Well, that's what has happened so far. In this video further, let's unravel if this growth trajectory will continue and what factors are involved in predicting it. Stick with me because we are about to dive into the answers to all those burning questions. Before we trace the roots of KPI Green in Gujarat, let's take a trip to Paris. Wondering what this company with Gujarati roots has to do with Paris? Way back in 2015, something called the Paris Agreement happened. The Paris Agreement is a global treaty wherein some 200 countries agreed to cooperate to reduce greenhouse gas emissions and control climate change. The agreement seeks to limit global warming to below 2 degrees Celsius, preferably to 1.5 degrees Celsius compared to pre-industrialization levels. In that agreement, India went all out.
India's announcement that it would ratify the 2015 Global Agreement on Climate Change increases the chances of the pact going into effect this year.
And pledged to have 40% of installed electric power from non-fossil based energy resources by 2030. In 2021, it was modified and India committed to meet 50% of its energy requirements from renewable sources by 2030. The ambitious goal is to achieve 500 gigawatts of non-fossil fuel based capacity in this time frame. But this couldn't be done with the policies we had. Policies changed and companies like KPI Green cashed in big time. But how did it do it? How did it achieve those monumental numbers? The short answer is Dr. Faruk G Patel. And the long answer lies in his journey from being a bus conductor's son to a head of a 17,500 crore plus business. He symbolizes grit and perseverance in its truest sense. And the story would even put the most inspiring of Bollywood movies to shame. Born in Gujarat in a lower middle class family, he had to take up responsibilities very early on. His father was a bus conductor, and just after his studies, he shifted to Mumbai to work as an optician to help his family financially while also understanding the import-export business. Sounds like one of the stories my father used to tell to inspire me when I was a kid. Moving on. In 1991, he moved to London in search of better wages to support his family, where he worked in a pizza store only to return to India to answer his calling and start a carting business in Surat in 1993 and founded the giant that it is today, the KP Group in 1994, with an initial capital of Rs 1 lakh in Surat, Gujarat. In 2001, he entered the telecommunications industry by establishing KP Buildcon Private Limited, which later became KPI Green Engineering Limited and was listed on BSE in January 2019. Before we deep dive into the stock performance of KPI Green, let's understand what the company actually does. KPI Green delivers renewable energy to its clients and helps expedite India's march to a net zero carbon future. Encouragingly, hybrid projects are now part of its asset portfolio, demonstrating the strength of its business model. They develop, build, own, manage and maintain renewable power facilities as an independent power producer and as a service provider to captive power producers under the Solarism brand. Think of IPP as a common water tank which supplies water to all the households in the locality, and CPP is like your personal boring where you can directly get water from the ground. Through independent power producer, the company sells power publicly to different business entities. On the other hand, as captive power producers, they make power plants for businesses which only cater to their needs and are not available publicly. From 15 megawatts of capacity under IPP in 2019, the company has achieved a cumulative capacity of 445 plus megawatts with IPP and CPP both in 2024. The revenue split between IPP and CPP in 2024 was 17% and 82% respectively. In 2022, these numbers were 25% through IPP and 73% through CPP. This trend of more revenue generation through CPP and lesser through IPP will solidify further and continue in the coming years. The reason behind this is quite interesting. Power capacity is more precious in CPP than in IPP. Let's understand this with an example. In 2022, under IPP, the company touched 100 megawatts of capacity and 65 megawatts under CPP. But this 65 megawatts resulted in 73% of the revenue, and the 100 megawatt of IPP just contributed to approximately 25%. Also, we need to understand that in case of CPP, a large portion of payment for the lease period, which is typically around 25 years, comes in advance, and the rest is through yearly maintenance and support. CPP is indeed becoming a cash cow for KPI Green. Under IPP, 90% of revenue comes from government orders, which acts as a secure and a reliable source. Yes, Sarkari Bharosa is still a big thing in India. 3 growth strategies have worked wonders for KPI Green: strategic land acquisitions, effective cost management, and profitable collaborations. Let's start with strategic land acquisition. From 850 plus acres in 2022 to 1374 plus acres in 2023 and to 2200 plus acres of owned and leased land across 33 sites in Gujarat in 2024, KPI Green has been constantly increasing its land holdings in the state. By securing land within the vicinity of efficient power evacuation infrastructure, they have streamlined project development and minimized transmission losses. Acquiring land may seem like a straightforward job, but only if it was that easy. The success of installing an industrial solar power plant is largely dependent on site evaluation and preparation procedures. It includes a thorough investigation of several important variables, such as soil stability, the influence of shading, and terrain analysis. Accurately determining the site's potential to maximize solar infrastructure collection while minimizing the construction and operation hazards is one of the most crucial challenges in this phase. Factors such as the orientation and slope of the land, potential for future obstructions, and soil type can significantly affect the feasibility and design of the solar power plant. With advanced geospatial analysis using satellite images and aerial drones, and soil testing with stabilization for solid foundations to install panels, KPI Green has been able to solve this complex problem like a breeze. Now let's talk about effective cost management. When it comes to setting up industrial solar power plants, especially in bustling hubs like Surat, you may feel like you have been hit by a financial solar flare. And no, we are not just talking about the price of panels and inverters, though those aren't exactly pocket change. The cost also includes construction, manpower, site prep, and electrical infrastructure. It's like building a mini sun in itself. And in India, where the solar industry is shining brighter than a summer afternoon, the cost involved in setting up a large-scale solar power plant can seem a sort of a buzzkill. And just when you think that you have got a handle on the cost, comes along the operational expenses for maintenance, security, and insurance. But fear not, there are ways to tackle these cost concerns. Here's how KPI Green managed to keep its cool under the financial sun. The first is government subsidies and policies. They leverage government incentives and subsidies such as Gujarat Renewable Energy Policy. Some key highlights of these policies: no capacity restriction for setting up renewable energy projects, and the settlement of renewable energy against consumer consumption is handled on a billing cycle. It's like getting a rebate on your electricity bill, only much bigger. The second is innovative financing models. With alternative financing options like power purchase agreements, solar leasing, and green bonds, businesses can install solar power plants with little or no upfront cost. The third is efficient procurement and design. Finally, going for high efficiency solar panels and designing your system to capture the maximum amount of energy is like squeezing every last drop out of an orange. Except in this case, the juice is pure sunlight and it powers your entire operation. The third pillar in the rampant growth of the company lies in its strategic partnership with reputable government and private organizations. In the last 1 year, KPI Green managed to secure orders from Aditya Birla Renewable Subsidiary Limited and ABREL Projects Limited for 396.5 megawatts, Maharashtra State Power Generation Company Limited for 135 megawatts. Additionally, 145.2 megawatts wind solar hybrid power project from Ayana Renewables Power 4 Private Limited under CPP segment. The company has emerged as the winner in the Gujarat Urja Vikas Nigam Limited tender for development of 240 megawatt solar power project at Solar Park Khavda. The power purchase agreement with GUVNL has also been executed with Gujarat Electricity Regulatory Commission. Additionally, KPI Green was a successful winner in the GUVNL tender for the development of a 50 megawatt wind solar hybrid power project. KP Group has also signed 2 MOUs with the government of Gujarat to invest Rs 17,690 crores in the state. This investment is earmarked for different renewable energy projects, including setting up of a green hydrogen plant. This will help KPI Green reach its ambitious goal of 1000 megawatts capacity by the year 2025. Now it's time to discuss what we have been waiting for, the stock itself. So let's talk about KPI Green's financial journey over the past 3 years. Picture this, their net sales made a fantastic leap from Rs 230 crores in FY 2022 to a whopping 1000 CR plus in FY 2024. That's not just growth, it's a financial transformation. Net profit? Oh, it had its own glow up too, jumping from Rs 40 crore to Rs 160 crores in the same time frame. The company's revenue experienced a noteworthy compounded annual growth rate of 111%, while net profit exhibited a substantial growth of 100% over the past 3 years. If we take a look at the cash flow, the net cash flow of the company has increased from 27 crores to 118 crores in 2024, which is primarily because of issuing shares. The last time KPI Green issued shares was on 12th August. The shares were priced at Rs 935 per share, resulting in an issue size of approximately Rs 1000 crores. However, here's a plot twist. Operating cash flow in 2024 was negative to the tune of Rs 57 crores. But before you panic, this is mainly due to a hefty Rs 387 crore investment in assets. They're expanding their land bank, and their land holdings grew from 1374 acres in 2023 to 2217 acres in 2024. Also, we need to understand here that KPI Green has moved from smaller clients to bigger ones like Aditya Birla and Ayana. The amount increases, but so does the billing cycle, as the bigger clients do not pay frequently on a milestone basis, which generally only small-scale companies do. On 28 August 2024, the company shared a great news that it has achieved a zero net debt status on a standalone basis. If we talk about the financial year 2025, they already have orders of over 1.3 gigawatts in hand. This is on top of 445 megawatts, which they already delivered till April 2024. If we look at their year-on-year growth in terms of revenue, it has been around 48% in the past 3 years. And the company is confident of maintaining this trend till 2030, as mentioned in a statement by Dr. Faruk. For FY 2025, they are forecasting a growth of 50 to 70% in profits. And if you're wondering about the big picture, the company has set its sights on hitting 10 gigawatts by 2030. A balance sheet gives a peek into the health of the company and gives strong indicators as to how the company is doing. Of course, you need to spot them, as they aren't always that obvious. Let's draw some insights from the balance sheet of 2024 for KPI Green. KPI Green Energy has a total shareholder equity of 840 crores and total debt of 1040 crores, which brings its debt to equity ratio to 124%. Its total assets and total liabilities are 2440 crores and 1600 crores respectively. KPI Green Energy's EBIT is 360 crores, making its interest coverage ratio 4.3. It has cash and short-term investments of 170 crores. If we look at its positioning in terms of assets and liabilities, its short-term assets of 1330 crores exceeds its short-term liabilities of 890 crores. Its short-term assets of 1330 crores exceeds its long-term liabilities of 711 crores too, which is really great. There has been a sharp increase in the short-term borrowings of the company in 2024, but it has directly translated into an increase in the inventory and trade receivables. Another positive sign from the balance sheet of 2024 has been the increase in reserves, from 222 crores in 2023 to 775 crores in 2024. After discussing so much about the company, we can say with certain surety that the company is on the right track and will likely do well in the future. But what about other companies in this sector? To understand this situation better, let's think of renewable energy sector as an IPL tournament, and all the companies in this space as different teams competing in the league. There are big teams, small teams, new teams, informed teams, out of form yet good teams, etc. Ideally, as an investor, you would like to put your money in the team which is most likely to win. But even if your team does not win, it doesn't mean you lose. There will be another IPL next year, right? Your job should be to put your money on the team which can win most frequently in the years to come. Let's compare KPI Green to some of the other high-performing companies in renewable energy. We'll use last 3 years data of compounded sales growth, compound profit growth, and latest net cash flow, and I'll share one interesting observation about each. We'll compare KPI Green with two of its peers, SVJN Ltd and Adani Green. Let's first take a look at the figures for compounded sales growth of past 3 years. Even though the sales have not grown, the stock price of SVJN Ltd has grown more than 5x in the last 3 years. One of the reasons behind it is consistent and healthy dividend payouts, which was 78% in 2024. Here's the compounded profit growth data of last 3 years now. KPI Green outshines its competitors in profit growth, courtesy of its operating efficiency among other factors. An example was when they completed a 12.5 megawatt project for their clients in just 4 months, that too in the most challenging season of monsoon. Generally, it takes around 6 to 8 months to execute such a project. Impressive, isn't it? Finally, let's take a look at the net cash flow. The high cash flow of SVJN is primarily because of the proceeds from borrowings, which isn't a healthy sign for the company. On the other hand, the cash flow for Adani would have been even higher if it were not for the high cost of assets purchased in 2024. As I said earlier, India aims to generate half its electricity from non-fossil fuel-based sources by 2030 and achieve net zero emissions by 2070. The Union Budget of 23-24 revolves around welcoming sustainable development. This goal has spurred significant growth in the Indian renewable energy market, with over 15 stocks surging over 100% in the past year alone. Many renewable energy companies in India are embracing clean energy initiatives to support these objectives. The demand for electricity is set to double in 12 years, and renewable energy will provide the majority supply. The tariffs for renewable energy are substantially lower than grid parity, even in the absence of subsidies. A company like KPI Green, which exhibits strong fundamentals, fast-growing clienteles, and operational efficiency, is likely to grow, especially as the stock is not overinflated. So that's the lowdown on KPI Green. Now it's over to you, Provestors. What's your move? Are you ready to jump on board with KPI Green, or are you holding back? Drop your thoughts in the comments and let's see where you stand.